Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 868A. And today's date is January 15th, 2016. And the title of the episode is The Drop in the Market is the Economic Collapse Warning Shot Across the Bow. Now, before I get started, I just want to make an announcement. I uploaded an interview with Joseph Meyer. It is on the X22 Report Spotlight YouTube channel, so you can go right over to that channel and take a look at it. Or you can come over to the x22report.com site. You can scroll down a little bit, look over to your right-hand side, you'll see the video there. Or you can go to newssentinel.com. This is my news site where I'm streaming in many different news sites from around the world into one location so you can figure out and keep track of what is going on in the world. And that is newssentinel.com, newssentinel.com. Let's get right into the economic collapse financial news. Now, the market has come down, and it's come down 300 plus points. At one point, it was much worse than that. And what we're seeing is basically warning shots across the bow. I mean, the S&P right now has crashed below August 24th Black Monday lows. And this is quite scary because the president just 2 days ago was announcing that we are in a full recovery and the economy is doing perfectly well. And all those who don't believe him are fools. They're peddling fiction. Now, am I saying that the stock market is the gauge of the economy? No. We've been looking at the gauge of the economy, and there's many economic indicators that go into this. The economy, for all intents and purposes, it is already collapsed. We are already in a deep, deep depression. The stock market is the last thing that the entire world looks at because it reflects on the corporations, it reflects on the U.S. government, it reflects on the central bankers. And if this is still up in a good range, people feel that everything is fine. And this is furthest from the truth. Things are not fine. Basically, everything has been happening, and what's happening now is the collapse is accelerating. It's not slowing down. This is a warning shot. Do I believe there's going to be collapse on Monday? No, I think what's happening right now, things are rapidly falling apart. I think the plunge protection team, the high-frequency traders, didn't expect this. They didn't have enough funds to pump this up. They tried as best they possibly could. And as Monday rolls around, we don't know what's going to happen. But we know the Asian markets do open first, then it goes to the European markets, and we can see how they're doing to judge and get some type of understanding of what the markets are going to do on Tuesday. But what's very strange is normally on a Friday, they give us a happy ending, making us feel good. Even if they can get it 1 point into the green, they're happy with that. And at this point, we're going into a 3-day weekend where it is completely horrific. Now, UBS is out there, and they're saying equities are now rolling over. Everyone should start buying gold. They're saying that the 7-year cycle in equities is done. It's rolling over. We could see a sharp 30 to 40% correction in the stock market. It's time to buy gold. And all of a sudden we see gold increase. Now, we're getting information from retail that retail sales during the holiday season were horrific. And we're starting to see more and more layoffs. Wells Fargo is laying off 121 in their IT department. Zeusk is laying off 40 people. GoPro is laying off 100. Walmart is going to fire 10,000 people in the U.S., 16,000 total. They're going to be closing 300 stores. I mean, this is unbelievable. More than 95% of the closed stores are going to be in the U.S. Now, If the retail industry was doing as well as they all want us to believe, we wouldn't be seeing store closures of this magnitude. Actually, we would see an expansion of retail because the government and President Obama and the central bankers are telling us that unemployment is at 5%. We're almost near full recovery in the unemployment market. So how in the world is no one spending their money? Because it's a lie. And we're seeing that retail's printed at negative 0.1 in December. And this is the weakest year since 2009. And when you look at the retail sales year on year, we are back where we were in 2008. And if you look at the graph, we're right at that point. Now, parts of the retail industry did absolutely terrible. We look at electronics and appliance stores, negative 0.2% down. Food and beverage stores, negative 0.3% down. Clothing, down negative 0.9%. We're looking at gas stations are down negative 1.1. General merchandise stores, down negative 1. Miscellaneous store retailers, down negative 2. And what we are seeing right now is the holiday season where most of these stores, well, I would say almost all of them, depend on sales during the holiday season to make it through the rest of the year. And it just didn't happen. So what does this mean? It means if they didn't bring in the sales, they don't have the revenue, which means they need to close stores. This is what we are seeing right now. If they close stores, they're going to have to lay off more people. Where, again, are they going to find these jobs if all these retail stores are closing? They're not going to be able to find a job. And then we will see initial jobless claims rise. Now, of course, those people working in part-time jobs, and they're working under, I think it's 25 or 30 hours, they will not be able to apply for this. But we are going to see more and more people who are in management apply for this. We're going to see corporations, because the stock market is taking a dive and these companies really don't have revenue coming in because they don't have the sales, like Caterpillar, IBM. They have down sales for, the last 36 months? The whole thing is falling apart. Industrial production came in at a negative 0.4%. November, don't tell anyone, was revised lower from negative 0.6 to negative 0.9. But of course, the corporate media doesn't tell you about that. And they blame this all on the weather. So basically, out of the last 12 months, I should say, there were 10 months that had bad weather because industrial production has been contracting for the last 10. So we know it's not the weather. I'm going to say it's the economy. I'm going to say it's this fake economy. I'm going to say it's this bubble economy that the U.S. government central bankers created. And we're starting to see it's taking its toll on U.S. trucking. U.S. trucking right now has hit an all-time new low. We're right back to 2009 stats. Basically, trucking right now is coming to a halt for deliveries. Rail traffic is coming to a halt. And I don't mean it's stopping physically. I mean the whole thing is just falling apart. And the volume is collapsing. And we can see why. We can see that deliveries are not needed because there's no demand from the people. Because the people don't have the jobs. So if people don't have the jobs, they don't have the extra disposable income to go out and spend in retail. If they're not going to spend in retail, stores are going to contract. People are going to be laid off. which then feeds the monster, and more people don't have the funds. So if there's no demand in retail, rail delivery, truck delivery, the volume is going to collapse. If the volume collapses there, manufacturers' factories don't have to produce. If manufacturers' factories don't have to produce, they don't have to order the raw material. The Baltic Dry Index continually drops. And that is what we're seeing. We are seeing everything fall apart. The Baltic Dry Index right now fell once again another 10 points. It is down to 373. As we look at wholesale inventory to sales ratio, well, that is flashing a recessionary signal, and business inventories to sales point is doing the same exact thing. It is heading into an inventory dump recession. The ratio is the highest since the last crisis, as both sales and inventories fell month on month, and it is absolutely awful. The Empire Fed is crashing at its fastest pace since Lehman. Right now, it's at negative 19.37. This is the largest miss on record. New orders have collapsed. Shipments plunged. Employees and work week continue to contract. So the last time the Empire Fed crashed to these levels was right after the Lehman bankruptcy and the global financial crisis in 2001. So during 2001 and during 2008, we've seen this. But the president continually tells us the economy's strong. So why are we seeing all these economic indicators pointing to a collapse? Something's wrong here. Someone is not telling the truth. And it's the government. It's the central bank. Now, what's very interesting in Business Insider, they had an article that said millions of Americans feel like the recession never ended. Well, that's because it hasn't. Basically, what they did was they created an illusionary recovery. But what we're seeing is that 93% of counties in the U.S. are still struggling to recover from that Great Recession. And this shows us that we never came out of it. We are put into this drug-induced illusion that we were in this recovery. And this is why the president is out there saying, you need to believe me. Because the truth is that this whole thing is coming apart and falling apart and collapsing. Just like in 2008, when they told us the subprime is contained, housing prices can't go down. That's impossible. We're not forecasting a recession anytime this year. All you people are crazy. You crazy conspiracy theorists. And what happened? During the same year they told us all this, the whole thing came crashing down. Well, what's very interesting is that the Atlanta Fed waited until the close of today, after the terrible stock market performance, to reveal that the fourth quarter GDP is going to be more like 0.6%. I mean, it's absolutely awful of what's going on right now. Now, of course, the Fed is out there telling us, listen, if the economy weakens further, we will go back to zero interest rates and we will implement QE4. Only if the economy does this. But we're looking at it and we're seeing that the economy is still strong. So they're letting you know. Now, of course, they're not going to just let the market, fall apart, because everyone will look at them saying, okay, 1 month ago you told us the economy is strong. You increased the Fed fund rate. The president came out and told everyone you're crazy for believing the economy is doing terribly. And now you're telling us if the economy is going to deteriorate, you are going to go back to zero and might even start up QE4. So they're not just going to let this happen, because their plan is to blame it on another group or country, and that is exactly what they're doing. Ron Paul is out there. He's saying, watch the petrodollar. And he's telling you what to watch for. He's saying that the geopolitical sands of the Middle East are rapidly shifting, and Saudi Arabia's strategic regional position is weakening. Iran, which is notably not part of the petrodollar system, is now on the rise. The sanctions are going to be removed in a couple of days. And like I said, this whole thing was not about nuclear weapons. This is why John Kerry slipped up and said, if we don't make this deal with Iran, the dollar is going to collapse. Because they're not on the petrodollar system. They want to put Iran on the petrodollar system to keep this system alive. And we can see right now, Ron Paul is saying that the emerging BRIC countries are creating potential alternatives to the U.S.-dominated economic security arrangements. And this is going to impact the petrodollar. And we're going to have to watch what happens in the Middle East, what happens in Iran, and what happens to the petrodollar, because this will give you a signal of when things are going to start to rapidly fall apart. And we need to watch this. You need to be prepared, because things are going to accelerate at this point. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.